This is Pat Lynch, and you are listening and watching the Career Pathways Podcast, brought to you from the Lyon College KILT studio, deep in the basement of the Maybe Simpson Library. In a moment, we'll get to our special guest, so I'll leave you hanging for a second. But before we get everything started, I'd like to introduce behind the board, making the magic happen, producer Cheyenne. Say hello.
Hello, hello.
Yes, she's there, and we're very glad that she is. All right, our special guest today, Mr. Dale Cole. How are you, sir?
Patrick, doing great.
Yeah. Now, is it CEO and chairman at First Community Bank? Because I always get everybody's title wrong. So,
Pat, I'm chairman and CEO of First Community Bank.
Yes.
I am chairman, CEO, and president of First Community Bank Shares, Inc., which is our holding company that owns the bank.
All right, Cheyenne, grading my degree of mistake this time. What would you give me? No mistake. It was close.
Close.
All right. Close enough. All right, well, Dale, thank you for joining us. First question we always start out with is just tell us about yourself, kind of where you're from and kind of what eventually brought you here to Batesville and to First Community Bank.
Pat, it's my pleasure to be here. Thank you for this invitation. I'm going to give you a little history of myself.
Yeah.
I'm a graduate of the University of Texas in Austin, Texas. So then I worked with my father for 4 or 5 years before I decided to go into banking. Right. And so my banking career, I started in downtown Dallas at a bank called Texas Bank and Trust. Then it became First City Bank Dallas. So that was my first experience of working with a large holding company bank. So then I moved from there to Marshall, Texas, where I really learned banking. Then from there, I went to McKinney, Texas, and learned even more from a man by the name of Chairman Stewart. Chairman Stewart owned this bank, and he had sold it to Bank Texas. So then one day I got a call from a headhunter, and his name was John Simeon, and he said, Dale, would you like to come and interview to be a CEO? And so, Pat, I was flattered.
Yes.
I had been president of a bank in McKinney, Texas, but I was not the CEO. Right. So I came and interviewed, and Worthen Banking Corporation brought me to Arkansas. So I was chairman, president, and CEO of First National Bank of Batesville and the Bank of Newark. Yeah. So First National Bank of Batesville then sold or changed their name to Worthen because they were owned by Worthen Banking Corporation. And so I was there, worked there for a number of years, and then I had the opportunity in 1997 to start a bank.
Yeah.
And so that was my dream, Pat, to always, be a CEO of a bank and to own part of it. And so what I did with First Community Bank, I started that bank with 14 people. And so I told all of my investors that I went and asked money for to start a bank, because you have to have capital.
Right.
And so I raised $3,452,300 in capital. And so we started the bank with 14 employees. And so I told all of those potential investors, I'm really not going to start a new bank. I'm going to move a bank, meaning that I would move it from where I had worked, try to get all those customers to follow me. Right. And so the rest is history. So now, Pat, we are around $3 billion in assets with 34 branches in 2 different states. Yeah. So it's been a fun event, a ride of a lifetime.
Yeah. Was it now looking back, it's like, yeah, it all kind of made sense and progressed a certain way. Did you expect that you were going to have this level of success when you were starting out?
Pat, a lot of people ask me that question.
Yeah.
And Pat, I thought I would be successful
Right.
if we were 250 million.
Yeah.
But now we're 3 billion.
Right.
And so how I got to that, there was a guy by the name of Bill Roussel. Bill is still living. He's in Searcy.
Mm-hmm.
And Bud Shreve introduced me. Bud Shreve was from Batesville. He introduced me to Bill, and so I went down and visited with Bill Roussel.
Right.
And so I always wanted to be in Searcy.
Right.
So I branched into Searcy. So how we managed that is how I manage all my branches today.
And how's that?
The way I manage the banks today, we have different regions now.
Mm-hmm.
So Searcy is a region. That bank is managed by David Wood. Mm-hmm. And then that region goes down to BB in Cabot. Then I go on down the road to Little Rock. So I have a region in Little Rock now. So then I have a region in Jonesboro, Conway, a region in Northwest Arkansas, and in Southwest Missouri, and in Harrison, Mountain Home. So I manage these by hiring the man or woman with the local knowledge.
Right.
And so I let them manage their banks. But Pat, this is a little bit trite for me to say this, but I watch them like a hawk.
Yeah. Oh, yeah.
Because I have to be in control for asset quality and liquidity, what's important for banks. Yeah, so that's how we manage it with a team of people.
Yeah, and with that region approach, you also are, I'm sure, taking advantage of the relationships each of those individual have within their community, because we've talked several times, and I know that whole community bank approach is something very important to you.
Yes, and so I have to mention Boris Dover.
Yes.
Because he's the man with the local knowledge here. It wasn't me. It was Boris Dover. So I knew that if I get Boris Dover to join me, then I could be successful.
Right.
So he joined me along with he and myself and 12 others when we started the bank.
All right. Well, all right. This is a career podcast. So what skills and qualities do you believe are essential for someone to build a successful career in banking today? I'm sure and there's probably like you have some historical context, but if you're looking for individuals like early career professionals coming out of Lyon College or whatever, what would you say? Okay, you need these sets of skills in order to really succeed in banking.
The first skill I think that you have to have is to become a good manager, is to learn how to listen. There's so many people that are in management and they have trouble managing other people. Yeah. It's because they don't listen to those other people. You have to listen to everyone. So communication is one of the most important things. So you have to be a good communicator. And to be a good communicator, you have to learn to listen first. Yeah. And so the way we manage all of these branches, what I call participatory management.
Right.
So I meet in the main bank here in Batesville every Friday. So I have team members on my executive committee that we talk about things in the bank. And so I don't tell them what needs to be done. I ask them, and then we build a consensus of what to do in the bank and in our company. So communication is the biggest thing of being able to relate to people.
Any other skills that you could think of?
Oh, the other skills that you have to have a lot of patience.
Mm-hmm.
A lot of patience.
Yeah.
You have to be a leader.
Yeah.
And so you got to be able to set that tone. You have to make the hard decisions sometimes of hiring people
Right.
or terminating people.
Yeah.
And so one of the most difficult things that I have to deal with is terminating people. But if they are not doing their jobs, we always give everyone a first chance, a second chance, and then after the third time, then I have to let them go sometimes. But that's not very often. Not very often.
What type of analytical skills do you see? Because underwriting is, risk assessments, valuation. I mean, there's probably things that are different today, but there's probably things that are always the same. Is that kind of a correct way of looking at it?
You have to be able to analyze people.
Yep.
You have to analyze risk.
Mm-hmm.
You and I have talked about before. And what I've always told Boris Dover when we started the bank, I said, Boris, only make one tackle at a time. Go just get one customer and then go get another one. And the other thing is, in managing risk, it's okay. I tell my people, told Mr. Dover first, it's okay to take a risk, so long as you know what you're doing. Yeah. But if you fly blind and you loan that money for some person or company and you don't know that risk, then you got problems. And so another fundamental test I always say is don't loan money to a company or an individual. You always try to take collateral, but always be willing to own that business.
Oh.
Or to own or to manage that business if you end up having to repossess it or foreclose it.
Yeah.
So that's the risk business.
Yeah, because it's do you see bankers, and I'm talking in like broadly in general, are taking on more risk these days?
Sometimes you forget history.
Yes.
And so history tells you that there is risk in lending. Right. So back in 2006, 7, and 8 with the major crash, we had a lot of problems. Yeah. But my history goes back to the 70s. You had that economic problem in the 70s. You had that same economic problem in the 80s. And so in the 90s, we never did have that problem in the industry, but we did in the 2000s. Yeah. And so those problems that occur is there's too much capacity that builds up. Everybody wants to become a home builder. Right. Everybody wants to do commercial lending, become an owner of a high-rise building or whatever it might be. And that's the problem. There's a cycle in business. And so the business has to cleanse itself. Right. And so hope we don't have to go through it again. But there's talk now of, are we going to go into a recession?
Well, in that, the Biden administration, they danced around that for, several years. And the Fed kind of was very skillful in terms of guiding this country through a soft landing. And we did have pretty serious inflation for a period of time. But do you see like bubbles or anything that, I don't see real estate necessarily overinflated, but I'm not, nearly seeing it at your level. I mean, are there things that cause you concern in terms of what you're seeing?
What happens to us? Yeah. And causes me concern, and I'll give you an example. Yeah. The Federal Reserve has maybe created a soft landing, it appears, but the Federal Reserve created a lot of problems too. For our little bank, and we're around $3 billion now, but we in 2023, not 24, but 2023, our net interest margin dropped by 37 basis points. Mm-hmm. So 37 basis points doesn't sound like a lot, but you take 37 basis points on those average assets at that time of around $2.6 billion, 32 basis points, that's 0.0032 times 2.6 million.
Can you do the math, Cheyenne?
It hurt our small bank by about $10 million.
Yeah.
So our gross income dropped by $10 million. Yeah. Now, this last year in 2024, it has rebounded because the Federal Reserve started lowering rates. Yeah. And so it rebounded so far, or for last year, was 32 basis points. So we recovered part of that.
And now it seems like it's going to hold steady.
It looks like it's going to hold. You know, our economy, Pat, is still strong.
Yeah.
So how do we measure the economy of strength? Is I measure it by outcomes on everything, but I look at past due loans. Right. So we have not had any serious problems of past due loans in our company.
Yeah.
Yeah.
Oh, wonderful. Well, we have a lot of students in the business program, but even non-business majors, and if they're interested in getting into banking as a profession, we talked about like skills you need, but what advice would you give to them? Like what would be like a best kind of first experience to get into banking, and kind of are there areas in banking that they should look at? I mean, if I had a group of my students here, what kind of advice would you give them?
Okay, I'm going to give you an example of what I did when I wanted to go into banking. Mm-hmm. The reason I went into banking, I wanted something that was more secure for my family. I had 2 children. Right. And so I chose banking to get into it. I had an uncle that had been in a bank, a CEO of a bank. And so I decided I would do that. So how did I get into a bank? So what I did, because I had a little bit of knowledge around real estate lending, I went to a bank and interviewed to become a real estate loan officer.
Oh, okay.
So that's how I kind of got my foot in the door. Mm-hmm. Now, what I tell everybody that I hire at First Community Bank, I tell whether it's a teller, new accounts person, somebody that's working in the appraisal area, in the credit area, credit administration, I tell them your future is unlimited if you join First Community Bank, because you can do whatever you want to do in your life, because we're not a static bank.
Right.
Right now, Pat, I'm talking to my team about what we do when we're $4 billion and what we're going to do to get there. So I always challenge my people. Right. So a good way to come into a bank today, depending on what you may or may not want to do, is to come in if you're a recent college graduate, if you took accounting courses, to come into our credit administration area of our company. So every bank has credit analysts. Right. It takes those financial statements to review those financial statements to be sure that they can pay for what they need to borrow if they're going to build a house, an apartment house, or a car lot, whatever what they might want to do. We have a credit analyst that spreads those financial statements for our officers. Now, when Mr. Dover and I started the bank, we did that ourselves. But now I have a team of about 6 or 7 credit analyst. So that would be a good way to come into a bank if you had mathematical skills
Right.
to analyze businesses or income.
So you have somebody who's looking for cash infusion, a loan. They run an analysis. Probably there's a number of ratios and
Yes.
and
So let me
metrics.
let me explain that.
Yeah.
For ratios.
Yeah.
For a commercial loan, all banks will be around a 1.25 or a 1.30 coverage. So what that means, if that payment, let's say, was $10,000 a month, then we want that to be $1,300 a month, or $13,000. If it was $10,000, we want $13,000 of income to cover that. Covers the payment by 1.30. And the reason for that is sometimes things aren't perfect.
Right.
So you got to have a margin to be able to borrow money. And so on your home loan, single family residence, your total payments, your house payment, car payment, taxes and insurance should not exceed around 36% of your gross income.
Yeah.
So if you're making $10,000 a year, your payment shouldn't be more than 36. Your total payments should not be more than $3,600.
Yeah, and I'm sure you have young families or others that push it, and they're trying, but then the risk of
some
the risk
people
goes up.
can do it at around 40% to 43%, but really that magic ratio is around 36.
So a credit analyst is a great experience because I'm sure you get to see a wide range of different customers that are coming through, whether it's business, home, business, residential, commercial real estate. I imagine they can see pretty much anything that flows through the
They
bank.
see all types of businesses.
Yeah.
And so I've told one man that was on my board one time, I said, if you'll come and become a board member, because we have to have board members to help us. And so I said, you'll see the good, the bad, and the ugly sometimes if you are involved in a loan committee on a bank. Yeah. So I had a customer come in this morning, wanted to talk to me about what he can do to try to keep his properties, because I've had to post those properties for foreclosure because he's unable to make his payments. Yeah. So that's just part of the business.
Yeah, it's tough, but nevertheless, you owe it to your shareholders and employees and everything.
It's not fair to everybody if I don't make them make their payments.
One thing, we were talking that the banking industry's changed an awful lot, hasn't it, since you started? Kind of walk us through kind of all the changes you've seen in your career as far as banking.
Wow, that's a lot, Pat.
We got time.
We got time. I started my banking career March the 1st of 1974. So we were in a bank in downtown Dallas. It was turned into First City Bank Dallas. Started out as Texas Bank and Trust. And so at that time, the industry looked at every check that came through. Operations. So, Pat, if you were to write a check, what they did is they would look at that, they look at your check, confirm that that's your signature. So,
you had a signature card at the bank.
Yes, they had a signature card at the bank, and all those people that worked in the operations backroom area of the bank would actually pull your check against that card, signature card. Yeah. So over that time, nobody looks anymore.
Yeah.
Because there's so much business, so much activity in checks. Or now it's not checks. So now it's I brought for you.
Yeah, let's.
In 1974, when I went into banking,
Yeah.
you used to have a checkbook.
Cheyenne, have you ever had a checkbook or written checks?
Mm-hmm.
Okay.
I have to write checks when I go to a job. I have to write a voided check.
Oh, okay, yeah.
But yeah, I know how to write one.
All right. But that.
So again,
yeah,
those checks went through the system. They don't go. They go through the system, but they never look at the signatures.
No.
And so now, you don't have to have that checkbook because you have a iPhone or some other type of phone. And so a lot of people do banking on their phone.
Yeah.
And then now you have, back in 74, you had a credit card, but you didn't have a debit card.
Right.
And so today you have a debit card, so I can spend this anywhere I want to go.
Right.
Now there's limits based upon your activity of the amount of money. So if somebody wants to spend a lot of money, then we increase that authority for that one transaction. So if they wanted to buy a $5,000 piece of jewelry for their wife, they can do that. But let me explain to you the risk of having a debit card. Our bank, $3 billion bank, we charge off every month about $20,000 of fraudulent charges on a debit card.
How's that occur? How just somehow
somebody steals your identity.
Yeah.
They get a debit card on your account. Yeah. It's not you.
Right.
But they use it, and so when it comes through, you say, well, Mr. Cole or bank, that wasn't my transaction.
Yeah.
Because somebody had stolen your identity and used this debit card. $20,000 a month.
Yeah.
So one time I was talking to Rennie Rutledge, who is the CEO of the bank there in Searcy, First Security Bank. And so I said, Rennie, we're losing $20,000 a month. He said, Dale, I wish it was that low. For him, because he's about a $6 billion bank. Right. He said, we're losing about $80,000 every month. So it's billions and billions of dollars. And I've talked to our congressmen. I've talked to our senators. I've talked to the FDIC.
Yeah.
That you've got to do something. When you find these criminals that do this, why don't you throw them in jail?
Yeah.
So these criminals, Pat, buy the card making equipment. So they get your identity.
Just create a.
They go out and they print a debit card, and they sell that to the fraudulent people around the world, and that's who steals from everybody. I mean, it's billions and billions of dollars. But I've never been able to get our congressmen or our senators to stop the sale of that equipment. You should only be able to buy that equipment that makes that card.
Right.
You should only be able to buy that equipment if you're a financial institution.
Right.
But you can go on the website today and buy one of those pieces of equipment.
Yeah,
It's crazy, but it's still out there.
Yeah, it's like when the old counterfeiters printing cash.
It's the same thing.
Yeah. And
same thing, Pat.
How important is technology for you in banking? Because I remember I was in Atlanta 23 years, and my bank was SunTrust, big bank in Atlanta, and they merged with BB&T, and don't quote me, but one of the drivers I heard why they merged was just that SunTrust wasn't happy with their banking technology, and they felt BB&T had a much stronger platform, and so they could roll up into one entity and not have to spend all this money on updating their tech. And I thought, well, that's an interesting reason for merging. Now they also, there's scale and everything else they got, but is that how important and what role is technology as far as how First Community Bank does business?
Technology is extremely important because they're the ones that run all the transactions and keep them.
Yeah.
So our company that we use is FIS, Fidelity Systems, but there's a lot of people out there that have those. So what you talked about, one bank buying another bank, they wanted that different technology. Yeah. It's at a higher level.
Yeah.
So as an example, we're paying around $200,000 per month for our data processing. Yeah. Just to keep up with everything. Yes.
Yeah, and because consumers all want mobile banking, right?
That's part of it. We have them. They need online banking.
Yeah, and so having it be very intuitive, and a website that you can move, pay bills, move funds, anything off of your phone right now. That's important. Where's it going next? Is there anything that like technology-wise, not giving away anything proprietary, but is there like the next step in terms of commercial banking technology?
I think the next step that we'll all have to deal with, I personally don't like it, but is artificial intelligence.
Yeah.
Because of the risk involved in artificial intelligence, who are you really talking to?
Right.
And so that's going to be the next big thing that we all have to deal with.
Yeah.
Yeah.
What about retail banking? Is there still kind of that demand for the teller, actual tellers and people coming in to the bank? I mean, the robots haven't taken over the planet just yet, but it's one that I imagine things have changed quite a bit over the last 20, 30 years when it comes to just what role and how important, the actual retail bank.
Yeah, a lot of people think that branches are not important.
Yeah.
Because of all the technology and online banking, and because they're doing their banking on their cell phones.
Right.
But people still want to talk to a human being.
Right.
And so I say we still have to build branches. So I'll give you an example. This last November, I had a strategic initiative meeting with my board of directors. And so we want to continue to grow. And so I told them that we have 88,000 accounts at First Community Bank. And so for us to grow, we have to have more accounts. So for us to get more accounts, we have to have new branches because people still want to be able to come to a bank for a home loan, for a car loan, for a boat loan, for education, for their businesses. And so it's hard to get that across to somebody that you don't talk to get a loan. Now you can, but so I always say when we started the bank that we needed a bank in this community, and to serve the people. And so I should say this: there was 3 people when we started the bank that told me to start a bank, and they invested in the bank. It was Royce Wilson, John Ballou, and Howard House. Howard House said, Dale, we need a strong community bank. So let me give you another example of what a bank does within a community. When we started the bank, there was about 300 million of deposits in Independence County. So now that number is about 1.6 billion of deposits in Independence County. And so what a bank does, they provide the capital for somebody to start a business, to buy a home, whatever it might be. So you have to have that capital. So we take the depositors and reinvest it by loaning money in every county that we're in, and so particularly in Batesville. So we're proud of that, helping that growth of those deposits.
Dale, you mentioned several times about being a community bank, and there has to be a distinction versus Wells Fargo, Bank of America. One of them decide they want to come in to Independence County, they're a large financial institution. I guess I'll just call them a bank. But how are they different than kind of what you try to do as a community bank here in town?
As a community bank, we invest in the community.
Right.
And so that's how I chose, or why I chose the name Where Community Comes First. So we invest in the community. We believe that if the community is stronger, the bank will be stronger. Right. So wherever you find a strong bank, you'll find a strong community. So if you find a strong community, you'll find a strong bank. So what we do is we really invest in the community. So if that person comes to the bank and maybe they want a $50 ad for their yearbook, we do it. We invest in the community.
Right.
So the White River Health Clinic here, we've invested every year for our last 27 years that we've been existing, helping that hospital, helping the school system, and whatever they need.
The Lyon Career Service Center. Thank you very much. Yes.
Helping Lyon College too, because we believe by investing in these things, it helps the community, it helps us. Right. So that's, I think, the difference of a community bank from a large bank. They just won't invest in the community.
Yeah, indeed. Kind of, you've been in leadership roles for a while now, and so as far as what have you learned in terms of, like, if we talked a couple things about advice, but your advice to leaders when it comes to kind of hiring, decision making, how to be an effective leader. Cheyenne is looking at, kind of like her career and aspires to be kind of in a leadership role. We're going to talk to the football team, a lot of young men too. What message would you give them in terms of, how to be an effective leader?
Well, I go back to what I said in the beginning.
Yes.
It's communication.
Right.
You have to be able to communicate with whoever you're working with. And so you want to work together as a team, not as individuals, but you collaborative work together. Right. And so I have a problem with people working from home.
Yeah.
Not that they're doing a good job, but they could do a better job if they would come into the bank, because you're working with other people. Right. And two heads are better than one. Right. Yeah.
That, the thing, with what I've seen, as far as your leadership style is, how you have more the leader that's got, has to fill the room and be the smartest person in the room, and with that, I think comes a high, a fairly high level of ego that you don't see the need for that. You could be in a room and let others kind of carry the meeting, and what you're doing, like you mentioned, is listening and
building consensus on a decision.
Yeah,
you're not being a dictator,
right? And
dictating what you want done. You talk to them and let them be involved. Yeah. And so what that does, that grows that individual. And so they become a leader amongst themselves or in their department, wherever they are, Pat.
Have you been pretty happy over the years with like succession planning, leadership development at the bank?
Yes, sir.
Yeah.
So we have to deal with regulators.
Right.
And so our regulators started talking probably 15 years ago about our succession plan. I said, well, sure, I'll put that on paper. So I put a succession plan on paper for every important position in our company. So if I die tonight, then Boris Stover takes over the bank.
Right.
And then if Boris and I die in a plane crash or a car wreck, then I have other people that will step up.
Right.
So I have that for every position in our company. That's a critical position.
Yeah, which is that's good because you're it's not that you see others can can carry on the mission and carry on the success.
And so I've used some of those community presidents that we have that are running their banks that I've told David Wood, if I die tonight, you might need to move to Batesville, Arkansas, so you and Boris can run the bank together.
Right. Well, stay around for a while, Dale.
Oh yeah, no, I'm going to stay around. I'm going to stay around, Pat. I hope till we reach the $4 billion.
Oh, okay.
Yeah, that's my personal goal.
Yeah. How long do you think it'll take to get there?
3 years.
3 years? All right.
3.5 years. So if you're $3 billion, you grow 10% per year. So if I take $3 billion times 1.3 times 1.3 times 1.3 the third year, that makes us about 3.9 billion.
Yeah.
So I think it'll be in about 3.5 years because we're growing about 10% per year.
Excellent. Well, real good. Well, I can't thank you enough for coming in. We talked about this, and getting you in the studio has been great.
This is my pleasure.
Yes.
Thank you for allowing me to do this.
Oh, well, thank you. And thank you to the audience. I'm glad that you joined us. We hope you really enjoyed this podcast, and that if you haven't subscribed, please subscribe to the Career Pathways podcast. And if you really like this episode or any episode that we've done, please give us a rating. Producer Cheyenne, what on a rating of 1 to 5 stars, what rating should they give us?
5 out of 5.
Oh, you bet that she's on that. And then always the last thing, we end with a question: where can you find the Career Pathways podcast?
You can find the Career Pathways podcast on 99.97% of all platforms. The same amount of germs that get killed with Germ-X, supposedly.
There you go. You have questions, producer Cheyenne always has the answers. And so thank you again for joining us on the Career Pathways podcast. We hope to see you next week. Take care.
This broadcast is sponsored in part by Lyon College and by KILT Studios.